Hey guys, what's good? This is Andre and today I want to go over a couple of stock picks with you guys. Like always, these are not recommendations to buy or to sell anything. They're for enjoyment purposes and for educational purposes. So I'm gonna start out with a couple of picks from you guys, actually, a couple of requests that you sent through. As a quick reminder, send your requests in the comment section below and I'm gonna be more than happy to cover a couple of them. I'm starting out with gold here, guys. So actually with gold, we are in kind of a diddling in the middle area here. I wouldn't really touch it. If you were able to catch the uptrend, you are probably on cloud 9 right now. We had one opportunity to buy on the breakout of the downtrend here. We had another opportunity to buy here on the retest of this important Fibonacci level. Obviously, we had another important opportunity to add here, again, retest of a pretty important Fibonacci level as well as the trend line that has formed. We are in a tough spot right now. It's not the easiest to trade gold. I still am biased to the upside because of all of the fundamentals that are basically backing gold and against the financial sector right now. I will show you guys in 1 second what I have on a different chart. I wanted to start from scratch on a chart just so I don't confuse anybody. But yeah, I think that if you are to be in for the longer term, I would probably look for a retracement to at least kind of the middle of the range in here. As you guys can see, we have this area that's being respected from the downside here, from the upside here, from the upside here, from the upside here. So it wouldn't surprise me if we were to respect it again should we retrace back into that middle range. Aside from that though, let me show you what I have on another chart. You can always, and this is gonna be extremely confusing and I do apologize for the noise here, but guys, this is what you can do right now, is just play supply demand zones off of kind of shorter term 4-hour charts. As you guys can see, we just hit the supply zone in here on a 4-hour chart and we are now getting rejected from that zone. So you can easily go for kind of a 2-to-1 risk reward ratio by playing supply demand. I wouldn't do much here. I'm just tracking these for fun's sake and taking very small trades here or there. But yeah, honestly, as I was saying, that middle of the channel, I'm gonna draw it here as well, just so you guys can see a different approach to the same trend. If we manage to retrace back into this, it could hit a couple of other important areas, so that might be something to look out for. Maybe we use Fibonacci for a couple of retracements as well, but it's kind of hard to play gold right now, I'm gonna have to be honest. The next stock pick was MULN. Honestly guys, this is a headbender. I do not know what to do with something like this. You can't short it anymore because of how beaten down it is, and except for the fact that it's down a lot, there's nothing bullish about it. Like, if you guys want to do anything with MULN, thanks by the way for the stock requests. If you want to do anything with MULN, I would start at kind of drawing some sort of a downtrend line here, and I don't think you can get it wrong. I would probably be conservative and say something like this, and if we manage to somehow kind of rally above, hold the trend line, here is where I would potentially start looking for entry opportunities. Otherwise, man, if you're in a long position here, I'm sorry, there is not really a lot of value that I can add. It's a pretty darn hard area to be in, if I'm being completely honest. The last request that you guys sent through was Disney, and it was kind of funny because Disney had earnings after market yesterday, and it's in a really interesting place. It actually pulled back quite aggressively, down 5.5% after market, and as you guys can see, it's in this dashed area over here. I really loved where Disney was going pre-market, and it was, funnily enough, it was on my list for yesterday, but I didn't add it to my video because I knew that there was going to be an earnings event, and I wanted to make sure that we don't confuse anybody, because you can't play these. They're always a coin toss. I haven't found a good enough way to be successful with playing earnings, so I'm kind of staying away from it. Now, it's really hard to make any assumptions after such an aggressive gap down. But what I can say is kind of a similar situation. We had a downward wedge after a longer downtrend in Disney. We managed to break above. We retested this area that became pretty important here, and then we kind of traded almost sideways, I would say. Now I would look for positions over here. If we manage to retrace back to $90, this offers us a fantastic risk-reward ratio. You can hold your risk really tightly. So maybe that even happens today. Who knows? After such an aggressive move down after market yesterday, who knows what happens by the time pre-market runs, and then the entirety of today's trading session. So I would probably look at adding something here, and I think that you can easily kind of target the underside of this trend line, the yellowish orange one, and you can get a 3-to-1 or even a 4-to-1 depending on when exactly it retraces back to 90 and when it manages to get back to retest that trend line from the downside. And that's kind of my view on these three guys. I'm gonna move over to another three that are my own basically. Texan is the first one, so Texas Instruments Incorporated. I would probably look at adding something here. Again, pretty tight stop loss because of this trend line that we have over here. It's a horizontal support resistance line that's been tested and confirmed very many times before. And even if I zoom out and I further extend this bar out, and you guys are gonna see that it continues to be confirmed and to be validated by earlier and earlier price action. Now again, we can keep a pretty tight stop here, so give it maybe kind of $4 to avoid any noise in here, and then we can target the underside of this downward sloping trend line here and have an easy 4-to-1 risk reward ratio. I think this is a pretty sweet one. The next one would be MMM, and for MMM guys, and actually let me take a breather here before we cover MMM. If you guys want more of these trading ideas and just overall guidance, feel free to support the channel on Patreon. You get a lot more ideas, you get a lot more value for just $5 a month, and you also help me just continue the work that I do here. For MMM, we are coming against a really interesting area here, where we are basically double, triple, quadruple downing here on the same $100 area. As I was telling you guys yesterday, round numbers have kind of a magnet to them. I think that the $100 area here is a really important one, especially since we haven't really tested it for a very long time in this one stock. And just below it, this is why it's really interesting, just below it at roughly $98, we have had previous peaks as well as a pretty important breakout throughout the past few years here. So what I would probably recommend is either holding out for this to further solidify and confirm this area of support resistance here, or potentially just take a very small position here. We would need to give ourselves a bit more room for error on the downside, so I would say $95 would be a good stop here in this case, which isn't the smallest stop to have. It gives you kind of a 6% stop, right? So that's not an easy one. And then for the upside, we can easily target either this $111 range, so a quick 1.9 to 1 risk reward. I think we can let a couple of positions run up until kind of $130, but that's at least a bit optimistic, and I think it will take at least kind of 6 to 8 months for this to play out. So it's not really a swing trade anymore once you get into such a lengthy amount of time. Again, it's not the absolute best pick for a swing trade, but still something that's interesting. Now, one setup that's extremely interesting is a head and shoulders setup here, guys, for dew point. And what's interesting is that the usual way to measure out these head and shoulders patterns is by taking the length of the head or between the head and the shoulders, and then extending that to the downside, and that's what gives you the take profit kind of measurement, believe it or not. So that leads us to believe that kind of $58 would be our target profit in this case, which gives us a pretty sweet risk to reward ratio. I would, however, wait for a retest. I think that's the perfect entry. Sure, you can take it now, but I think it would be at least a bit risky. So I would probably wait for a retest, give it $2 to $3 on the upside for a potential liquidity grab, maybe $4, and then have the stop loss or the take profit. Actually, give me a sec, I was longing this position, I need to short it. So yeah, having the stop loss over here in the $69 area, the take profit in the $59 area, and that gives us a 3.5 to 1 risk to reward ratio. Guys, that's about it for today. If you enjoy the content, subscribe, give it a thumbs up, and I'll catch you guys next time. Take care.